Guys, Leggy here and welcome to a new video. Basically, I got told the other day to go through my high conviction picks and the stocks which I want to buy going forward. So basically, I have brought one stock from each sector, and this is because I want to stay diversified. What's the effects of staying diversified? So it's important to actually have a diversified portfolio because it basically attempts to reduce risk across your portfolio. So, for example, one sector's having a really bad year, another sector's having a really good year. You're hoping that, that gain will offset that loss. Although, as I go through it, you might be thinking that a really massive narrative that is going on at the moment is blockchain. And unfortunately, in this pie, I have not picked a stock that involves this. Why is it? Well, we've actually got a pie that includes this. I am a massive fan of blockchain technology. I do hold crypto. Why do I like it so much? Well, one, banking systems are built on a legacy banking system, which means that actually there's cryptocurrency out there which helps cross-border payment. Two, it's got better security, and there is cryptocurrency out there which is working towards efficiency and cost savings. So really, there's been a narrative which I'll stick up here, which is basically Bitcoin is so bad for the environment, but there is contrasting evidence which has got a lot of play to it, which I'll stick here. Now, some massive news within this space has actually happened with the FCA actually approving the London Stock Exchange the launch of Bitcoin and Ethereum ETPs. So this happened yesterday. So an ETP basically stands for an exchange traded product. Also, some news from America has happened in regards to cryptocurrency. Basically, there's been a lot of news and it's been trending a lot of on Twitter recently. I'm not sure if it is going to get approved, but a lot of reliable sources have picked up on it now. But basically, it's saying the SEC Ethereum ETF discussions are underway, S1 approval expected in hours. So away from cryptocurrency and that side of things, for the rest of our portfolio, what are the key impacts that are affecting what we'll be investing in the next 12 months? So firstly, Rishi Sunak yesterday announced the date for the election. Now, what effect does this have for us? Well, Bloomberg actually said UK election kills chance of June rate cut, ex-BOE official says. Obviously the US, because we are investing in a lot of US stocks, they've actually got their own election coming up. I believe it's November 2024 when that will be happening. So if we look at this article by IG, it says interest rate cuts, when, how much and what it means. The markets are currently pricing in a 68% chance of the Fed cutting rates by 100 basis points or more in the next year. So if you guys don't know what basis points is, you might see it in a lot of articles, but you might not know what it is. It's basically the percentage change in the rate of a benchmark. So basically 1 BIP or BPS is basically equivalent to 0.01% change. So it also says May 24th could be the first FOMC meeting in which rates are lowered. So the FOMC is basically a branch of the Federal Reserve which oversees the market. And what has this meant? This has actually meant that the dollar has depreciated recently, and it says in this article that this can be attributed to the changing expectations in interest rates. And this is because they revealed lower than expected CPI data. CPI is a measure of inflation. So obviously, with the UK election and the US election, there's a lot of uncertainty at the moment. So obviously, it's going to be a massive change in the UK because Labour seem like they're in pole position. And this article by Reuters actually says a surprise British general election in July has removed a layer of uncertainty for UK markets, leaving investors to focus on the outlook for interest rates and the economy as dominant forces driving the pound stocks and bonds. So UK inflation actually fell from 3.2% in March to 2.3% in April. And what this actually means is that the British inflation has actually fallen below the US and the Euro. But another key thing to note is that, as this article states, is British debt has been hit hard over the last 2 years by a jump in interest rates and the Trust mini budget. everyone goes on about mini budget. It absolutely wrecked everything when it came out. It says the index of gilts has dropped around 30% since 2022, compared to declines of less than 20% for the Eurozone government debt and US treasuries. So the first stock we're going to be looking into is basically BAE Systems. What sector is this part of? It's basically part of aerospace and engineering. So I did actually hold a whole pie of this, but I felt uncomfortable holding it because of the geopolitical issues out there. So I basically sold a lot of the holdings I had in the other stocks, but I really like what BAE Systems is doing outside of this, and I've held them for a long time, so I thought, why not hold that one? So obviously in 2022, Russia invaded Ukraine, and this has caused stocks in this sector to really rise. So basically, since that point, this stock has rose by 57.6%. Now, as I said in another video, a key metric to see if a stock's undervalued is its PE ratio, and this one is currently 23.36, which is quite high compared to other stocks. Normally, the general rule is like a really good undervalued PE ratio is under 10, but if you look at its peers and other stocks within this sector, basically the average PE ratio is about 45. So why I also like it is obviously it's a dividend payer. It's in a lot of people's UK dividend portfolio. It's got a dividend yield of 2.18%. So BAE Systems is actually forecasted to expect a year-on-year increase of 10 to 12% and an increase in underlying earnings of 11 to 13%. So the second stock we've got in the pie is GSK, and this one has got a dividend yield of 3.32%. And when they released their full 2023 results, it was actually announced that their total sales rose 5% a year, and their operating profit rose by 12% a year. These are both obviously great indicators of really good business performance. Although, as I said, it does look like the rates aren't being cut anytime soon, and while the rates are so high, this can be risky in the pharmaceutical industry. Basically, the typical model for a pharmaceutical industry is for them to raise capital from external investors to fund rounds of clinical trials of new drugs. So when the interest rates are high, it's much harder to raise the funds from investors. So this can ultimately actually slow the development of drugs, which is obviously where GSK makes their money. So next up we're going to be looking at is BT, and I invest in this because I wanted telecommunication stocks. I really don't like any other business in the sector. They're very diversified, but this bet seemed to actually really pay off because BT the other day posted a 3.9% dividend rise, making the stock rise 10%. And they also announced that they believe they've reached peak expenditure, meaning they've hit their 3 billion cost savings target a year quicker than they thought. So our next stock is Alibaba, and you're probably thinking, why didn't you go for Amazon? Well, first we've got a Mag 7 pie, which capitalizes on the Magnificent 7 stocks. But also, Alibaba has actually got a really large free cash flow. So this is important because it means that a company can get past adversity when the economy is doing quite badly because they've got that free cash to when something goes wrong. So this means that it's a measure of the company's financial health. It also means they can pay back dividends and facilitate the growth of the business. Also, Alibaba has actually really aggressively been buying back their stock. So they actually brought back 4.8 billion in shares in the first 3 months of 2024. And brought 23.3 billion in the last 2 years. What is a risk to this company? Basically, I don't know if you guys have heard of, but basically US and China political matters have got a bit tense. With the US actually banning Chinese companies from using the latest technology from Nvidia. So this might mean that they might struggle keeping up with US companies when it comes to cloud computing. So the next stock we're going to be looking at is National Grid, and I'll put the graph of their shareholder awards here, and this is a great reason why we're investing in them. They're like good old reliable. You'll see a lot of dividend stocks in the UK with this in. Although what is the risk with this one? Although they're looking very healthy compared to their competitors, it does seem like this industry in a whole will have to do will have to put a lot of money in to decarbonise the UK's electricity network. So if you guys don't know, basically, as we're fast approaching 2050, people are trying to get to zero net carbon emissions, and this will be reflected in future laws. Our next stock is PayPal, and this stock is still quite early, but this one is in here because one, we needed a financial stock for the aim of the pie, and two, they've got a really positive outlook. So if you guys don't know, PayPal had a CEO change, and with this change in CEO, there's a much more positive outlook on the company at the moment, with him focusing where the company can act more efficiently. So next we got Legal & General, and Legal & General, another staple in any UK dividend portfolio, with them actually growing their dividends every year for the last few years. Now, I actually live in Cardiff, and Legal & General's presence is actually massive in Cardiff. With you going to any building, you'll see Legal & General sign. And this is actually shown on their website. It says, we have invested over 1 billion in Cardiff. And I do think that when you can actually visibly see the work of a company, it gives you more confidence as an investor when which, you know, and more confidence means that you can get past turbulence in a company's price action better. So we've got Oracle as well, and Oracle is basically got a lot of links with cryptocurrency. So basically, I absolutely love quant. I've done loads of videos on this channel on quant, but that's not why we brought this stock. So basically, we've done quite well with this stock so far because it says that Oracle Corp recently announced a dividend of 0.4 per share. This dividend made the price of the stock go absolutely mental. And also, Elon Musk is actually currently working on a really big deal with Oracle to secure more cloud servers. And they also worked with Nvidia. They had a deal, an announcement a couple months ago, where they actually wanted to bolster their AI infrastructure. So I just really like the work the company's doing. So our next company is ASML, and it's no secret that semiconductor stocks are going absolutely massive at the moment. A lot of people talk about the semiconductor industry. So ASML actually provide really key equipment for this industry. And in its forecast, it's actually expecting an increase in earnings of 21% for the next 5 years, which is why, in my opinion, I really want to get into this because I do think that semiconductors is a really rising industry, and ASML gives you exposure without basically picking a certain competitor within that industry. So Novo Nordisk, you guys have probably heard of Ozempic and the weight loss drugs, and this has really affected Novo Nordisk's price this year with the success of this. So we are currently 9% up on our holdings, and over the year it's up 60%, so it's grown massively. So obviously, firstly, Ozempic is used in weight loss, and where there is effects of weight loss, there's always going to be massive money. But secondly, Ozempic is actually used to improve blood sugar levels in type 2 diabetes. So there are actually diabetics in my family. I've seen, you know, what diabetics can do to a person in their old age, and the importance for medication that can help this. So if we give an overview, so we are up 6% on the pie at the moment, with BT up massive 17%, Alibaba up 12% because we wanted exposure to the Chinese market, and it seems like the Chinese market has recovered in the last few months. The only stock we are down on is National Grid, and you know, if that's a holder, the dividend yield will make up for a bit of loss on that anyway. But this pie does seem like it's doing really well. We're up at the 1,000 goal. But yeah, I hope you guys did enjoy this video. Please leave a like and subscribe, and I'll see you guys next time. Peace.